Good day everyone, this is your European Open briefing for Wednesday, October the 5th. I'm Rafi Bajajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So today we're pretty much seeing extension of yesterday's trends. The dollar is continuing to climb to fresh 2-month highs, and this is mainly on growing expectations that a Fed rate hike is nearing. Sterling continues to come under intense pressure. It's touched a fresh 31-year low this morning. It dropped below $1.27. There's been some interesting moves regarding the euro, and this follows reports that the ECB is making plans for cutting back on its asset purchase program. In other currencies, we saw the Australian dollar rise slightly on strong retail sales, whereas the New Zealand dollar, on the other hand, has come down sharply on yesterday's dairy price auction, where we saw a fall in dairy prices. And the main news in commodities is that gold has hit a 3.5 months low, and this is on the back of a stronger dollar. So let's have a closer look at what's happening with the dollar. We saw the dollar index climb to a 2-month high of 96.44 yesterday. We're seeing some fairly hawkish remarks coming from Fed policymakers. Jeffrey Lacker yesterday said that there is a strong case for raising rates. We also had some comments from Charles Evans, and he was fairly hawkish as well. He said that he'd be fine with an interest rate hike before the end of the year. We saw the dollar rise just above 103 level just a few minutes ago. And this is a 3-week high for the dollar-yen pair. There's some interesting data coming up later in the day. We've got the US factory orders, the ISM non-manufacturing PMI. We also have the ADP employment report, which should give us some indication of what to expect from Friday's all-important non-farm payrolls. There is a bit of concern, though, amongst US traders, mainly the uncertainty over the outcome of the US presidential elections in November, also over the possible impact of a potentially hard Brexit for the UK, which is creating some unease in Wall Street. And this unease regarding Brexit, it has pushed the pound below $1.27 for the first time since June 1985. Cable hit a low of 1.2685. It's currently just above $1.27. Euro pound is also continuing to climb. The pair hit a 5-year high of 0.8842. We've got some important data for the UK coming up. It's the services PMI from market. Expectations are of 52, slightly weaker than August's 52.9, although it is likely that it could be the expectations given that both the manufacturing and construction PMIs they've already seen out earlier this week have both been very strong. And there's yet more talk of a hard Brexit. This comes after British Prime Minister Theresa May said that having control over borders, UK borders, is more important than remaining a full member of the single market. And speaking yesterday, May said that a few bumps in the road is likely, as the UK goes down the Brexit path. And this is pretty much keeping traders basically creating concerns over what will happen to UK's relationship with the EU, and that's continuing to pressure the pound. The euro, on the other hand, saw a big jump yesterday. There was a fairly big jump from around 1.1137 to 1.1238. The euro was falling yesterday, basically on the back of the stronger dollar, but there were some reports on Bloomberg that the ECB is making plans for QE tapering. This pretty much means that tapering is when central bank starts to withdraw from its asset purchase program. The ECB denied this. They said that the Governing Council has not discussed the topic, though this was enough to send the euro back about $1.12. And of course, we're likely to see an extension of the QE program before the ECB even starts considering cutting back on its massive asset purchase program. Now let's have a look at the antipodium pairs. We saw the Aussie climb to 0.7644 following the release of the August retail sales for Australia. Retail sales were up 0.4% month on month. Expectations were for a figure of just 0.2%, though the Aussie quickly fell back down again. It's currently around 0.7615. The New Zealand dollar, on the other hand, has been much weaker. It came under pressure yesterday after dairy prices fell for the first time in 2 months. They were down 3% in yesterday's auction, and this sent the Kiwi down to 0.7167 versus the US dollar. Now gold has been sliding for the past week. Yesterday it dropped below $1,300 an ounce for the first time since June 24. It hit a 3.5 months low of $1,266.33 an ounce, and there's several factors for this. Obviously, the high US interest rates, the ongoing expectations that the Fed will raise rates in December, the ECB taper talk. This story also puts some pressure on gold because obviously tighter monetary policy around the world, or let's just say less loose monetary policy around the world, is negative for gold. And so gold is currently stuck around $1,270 an ounce as a result. Coming up later in the day, the main data in the European session is going to be Eurozone retail sales. We've also got the final services and composite PMIs for the Eurozone, as well as the UK services PMI. In the US, we've got the ADP employment report, we've got trade figures for the US and Canada, US factory orders, and of course the all-important ISM non-manufacturing PMI, and that's going to be watched closely. Expectations are that it will rise to 53 from last month's 51.4. That's it from me for today. Thank you very much for watching. Have a great day.